Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Tuesday, November 4th, 4:47 p.m. Eastern Time, coming to you from the financial capital of the world, St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Keep hearing all day on the news that a socialist is about to become the mayor of the financial capital of the world, but we all know that's not possible to have a socialist in charge of the financial capital of the world. So I will be the de facto mayor going forward. If you have any questions about that, you know where to find us every night for at least 15 minutes when we do our videos, plus a weekly podcast, plus a weekend walkthrough. Revere Asset Management striving to be the only video that you need to watch to keep your finger on the pulse of what's going on with the market. And not a good day in the market today. State of the market, we continue to be in an uptrend, but we've got more cracks appearing under the surface. Brett has been bad for a while. We've been mentioning that. Uh, the big cap tech names have been holding up the S&P 500 and the NASDAQ 100. They're in the process of pulling back. So check the trend gauge over here. We still got four green arrows, but three sub arrows as well. Leaders, 33 out of our entire 33 leaders list. That's the 21 over 21 and the Turbo 12. Every single one of them down today. You don't have to be a genius to know that that's not good, especially when you see how much the average stock in that list was down. So we've got a yellow arrow pointed there, a yellow sub arrow underneath growth. A lot of them have pulled back just near the 21, probably 80% still above the 21. We want to see what happens going forward the rest of the week. Short term, equal weight S&P, mid caps, multiple closes below the 50-day moving average and 21-day moving average. Small caps pierced the 21 and 50-day moving average today as well. So we've got the yellow sub arrows on our short term trend and our medium term trend. Long term, solid green arrow. Market never gets into serious trouble until the indexes break below the 200-day moving average. So what happened today? Plain and simple, gap down at the open, attempted rally for about the first hour, tested the opening low several times throughout the day, and that held. But the bottom line is leaders were sold with two fists today, pretty much all day long. So leader smacked as market rotates into value is a pretty good explanation of what went on today. 21 over 21 down an average of 4.4%. Turbo 12 down an average of 5.4%. As I said, all 21 and all 12 lower on the day. The big eight down a little less than 2%, led to the downside by Tesla, down 5.2%. The RG8 down 2.83%, led by FFTY, that's the IBD 50, and ARTK, both down 5.2 and 5.3% respectively. S&P 500 gap down 1.1, attempted to rally, closed a little lower, a little bit beneath where it opened, down 1.17%. Equal weight, nowhere near as bad, just down 0.66%. That tells you that money was rotating into value, as does the fact that the Dow is only down 0.5% today. NASDAQ 100, meanwhile, has been the leading index as of late, but it was down 2.03%. Equal weight, NASDAQ 100 down 1.7. Mid caps down 0.9. Russell 2000 small caps down 1.8. Global diversified 60/40 stock bond down 0.76%. Our flagship portfolio, GROTECTION, taking it on the chin, down approximately 2.04%. TurboTection hit as well, down 1.8%. Reminder, please click like, share, and subscribe on our social media, especially YouTube. The like count, the subscription count helps get our the algorithm pick up our feed and put it into the feeds of people that are looking for financial help. So let's get to the markets. Here is the S&P 500, and this really doesn't look bad. Multiple gaps last week. put a couple of people on edge because multiple gaps in a row normally get filled, and we did pretty much get them filled today. 3 day tight consolidation broke to the downside, so we're below the 8 day moving average by our index allocation GROTECTION rules. We trimmed some SSO. We were overweight on the S&P. We want to be overweight if we're above all four of the moving averages, still above the 21, slight overweight there. Today's lows need to hold, as does the 21-day moving average. Still above the 50-day moving average, and you can see the 200-day moving average. S&P is, whoops, S&P is 10.6% above the 200-day moving average. Let's go to the equal weight S&P. That's the RSP. You can see multiple closes below the 21 and 50, and the 21-day moving average is breaking below the 50-day moving average. Relative strength on this has been awful going back to March of this year. NASDAQ 100, the leading index, pulling back, though, same two gaps as last week, filling the second gap, breaking the 8 day moving average, still above the 21-day moving average. Last of the big cap indexes, the Dow Jones Industrial Average, broke the 8, bounced at the 21. Mid cap index has also been weak, bounced at that 3,200 level. It is also below the 50 and 21-day moving averages. And finally, the Russell 2000 undercut and reclaimed the 21 for 2 straight days, but not today. And in fact, also add a break to the 50-day moving average on there. And 3 weeks now, the relative strength has been not good there. And in fact, relative strength is leading price to new lows. That's not good to see. Inter-asset correlation time. Let's start with the VIX. Big spike up in the VIX today, up 10.7%. With a 19 handle, that's still below the long-term average, which is around 9.5%. The US dollar, that cup and handle breakout continues to work, but we're coming into the declining 200-day moving average here. Dollar slightly up again today. And the leaders up until about 3 weeks ago, gold, silver, and gold and silver shares, they continue to lag. Gold down 1.75% today, silver down 2.3%. Back to GLD, you can see it wedged up into the 21-day moving average, but failed there. You got the 50-day moving average for support below that. Let's go to gold and silver stocks. They wedged up into the 21 along the 50-day. That broke today as well. Terrible relative strength over the last 2 weeks after a very strong move up on gold, and silver stocks. Crypto not looking good at all. This is IBIT breaking the 200-day moving average, down 5.5%, and Ethereum still above the 200-day moving average, but down 10.4% today. Yikes. You got to have stops for these, just like you do everything else. It's not stick it in your portfolio and hope that it continues to go up. Because as you know, I'm fond of saying owning rotten fruits and vegetables is no way to have a balanced diet. Owning rotten stocks is no way to manage a portfolio. On to bonds, the broad bond index. Bonds traded in a tight range today. Price slightly higher on the average bond and the long bond, meaning a little bit of a tick down in yields. There's the 30-year and the 10-year slight tick down as well. Let's get to our tail of the tape. All of the daily stochastics for the indexes and the RG8 all rolled over. NASI, this is rolling over as well after being neutral. Dollar, that broke out. So let's change that to a red up arrow, even though that's a red up arrow is what that should be. Dollar is generally not good for stocks. Rates falling, but still in a consolidation. Stocks against the 5 day moving average. To the downside, 38% for the S&P, 25% for the Nasdaq. Government shutdown hits longest in history. Reading a lot of things about it, how it's really starting to affect the economy. He's coming into today. The index is against various moving averages. We broke the 8 on the S&P. We're basically sitting right on the 21. Broke the 8 on the Nasdaq 100, still above the 21. Broke the 21 and 50-day on the Russell 2000. Day count after a 4-day consolidation, clear down move today. 1 day below the 80 MA, 13, kind of an asterisk here. We're basically sitting right on it, and the slope of the 21-day moving average has flattened as well. We need an up day tomorrow to get the momentum back pointed in the right direction for there. We'll be trimming some more positions. S&P 500 ATR is above a 1, too. Not too far extended. It's a 1.16, but we prefer it to be below a 1. Minimal volatility is good for stocks. We're not seeing that right now. To the upsides, value sectors, financial staples, healthcare, and real estate. To the downside, oils, semiconductors, all makes of software, gold, and silver stocks, and nuclear stocks continue to get hit. A couple of portfolio changes. We added to TER in GROTECTION, trimmed SSO, as I said, with that break below the 8 EMA, 1.31 volatility adjusted beta, 4.41% balance at risk. Turbo added to SSO. We had an oversize in Grow. Turbo wasn't oversized. So off the 21-day moving average is a very reasonable add point. So don't get confused when you see the fact that we trimmed in one portfolio and added in another. It's just about overall portfolio management. Sold uranium URA, trimmed Alibaba 1.09, volatility adjusted beta for Turbo 3.67% open heat. Bottom line on the day, leaders hit hard. No way to sugarcoat it. It happens. But our portfolios certainly held up better than if were all loaded in growth names. You see the RG8 down 2.8, the Turbo 12 down 5.4, the Twin Over 21 down 4.4. This is why we keep that core position in the S&P 500, because on a days like today, when you rotate into value, all that rotation takes place within the S&P 500 and help keep the equity curve smoother. Let's take a look at a couple of names. Let's take a look at what broke the 21-day moving average in our leaders list today. So start off Hood with a slight close below. They've got earnings tomorrow after the close. Possible trim for our position looming there with a down 7% day. Corning breaking the 21-day moving average. We gonna make it bounced at the 21. Tesla sitting on the 21. VRT sitting on the 21. SoFi bounced at the 21. Palantir bounced at the 21. And the rest of them have quite a bit of distance relative to the 21-day moving average. So uh, not all thorns. We've certainly got some roses as I page through these. You can see that quite a few have held up quite well relative to the 21. Doesn't mean they're going to hold up tomorrow, however. Now let's go to Turbo 12 and see what broke the 21. Path broke. AAOI broke. Tempest broke and is down more after hours as it reported earnings. ARCG broke. AVAV closed right on it. So that is 1, 2, 3, 4 of the 12 broke the 21. SCCO make it 5. TMDX make it 6. And the rest are above the 21-day moving average. So half of the Turbo 12 breaking the 21-day, and 4 or 5 of the Turbo 2121 breaking the 21. Let's go to a couple of more after hours earnings reports. AMD, big one. That's down 1% after hours. What they say on the call, will be critical to what happens with the semiconductor, the reaction, not necessarily what they say, the reaction to what they say. This was down more. It was down closer to 240, but bouncing a bit. I already mentioned TEM is down. ANET is an AI networking stock, but cross this off the leaders list as this is down 11% after hours. And Light, a fiber optic name also tied to AI data centers, having a very positive reaction, up 10% after hours. And let me make sure that is in the 21 over 21 list. I'm pretty sure it is. It is. We'll keep an eye on that. Also, want to keep an eye on something that gaps up like this if it fades during the day tomorrow, because initially Palantir was having a great after hours earnings report, and then it started to sell off, and then it opened below the 21-day moving average, bounced around between the 8 and the 21. So today's highs and lows on Palantir are critical for a perspective on what's happened to that name going forward. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855 Real Wealth. That's 855-732-5932. On our website, two things you can do. You can contact us if you're interested in becoming a client, or you can go to the newsletter page if you'd like to sign up for that. We've had a ton, literally over 2,000 pounds of people signing up, multiple tons, in fact, if you want to go by gross weight, I'm quite sure. Since I did that appearance on IBD Live on Friday and also summarized it on our podcast over the weekend or on Friday when it was released on Friday. And the whole presentation is in there on the podcast. If you haven't seen that, it was called LREP Shotgun, which stands for Low Risk Entry Point Shotgun. It is a way to get into names after an inflection point. Today, an inflection point definitely for leaders. Today's lows are critical when you get a big break like this. Also critical on the S&P that today's lows hold a little bit more room on the NASDAQ 100 between price and the 21-day moving average. And with that, I'll wrap it for Tuesday, November 4th. Remember, it's not how much you make in the market, it's how much you can keep. A one-day correction like this, leaders getting hit, the broad index is getting hit. Breadth has been bad lately. We got stops in place for everything. We can tell you that's what our rebar is. Your estimated balance at risk tells you how far down, how much will you lose on your portfolio before you be completely out of the market or basically hedged in the market. And no other advisor tells you that. And with that, I will wrap it for Tuesday, November 4th. Don Vandenbord with Revere Asset Management, telling it like it is. It's not always a rosy picture, but it's always the truth. Thanks for listening and have a great day.